very good evening and a warm welcome to Personal Finance. I'm Gugulethu Cele. While investing in the stock market is not only for the wealthy, you too can invest directly into shares on the JSE. But what are the important elements that you need to remember and understand are the basic principles for investing? To tell us more as to what this entails, I'm joined in studio by Carin Meyer, CEO of FNB Share Investing. Good to have you with us this evening, Carin.
Good, thanks for having me.
Maybe let's take a first step back when it comes to the thoughts and the illusion with regard to the stock market. Many people often think that, it is something for the wealthy. I can't invest, but I take it from a banking point of view. If you have 300 Rand to spare at the end of the month, you too can invest, right?
It really is as simple and as affordable as that. So I think at FNB we've done a lot of work in terms of having a look at who our market is and who are the people who aren't in the market and why aren't they in the market. And one of the main things is definitely affordability and that illusion that it's only for the rich. I need to know a broker. I need to be able to phone a broker and tell him what to buy and what to sell. And it's not that complicated. So I think as ourselves and some of the other banks started offering these on their banking platforms, it demystified how the process works. And it really gave access to every person out there to invest in the market.
And that's precisely the point, the affordability and knowing exactly where their money is going to and how they'll actually make a return. Do you find that maybe it's been tricky to get investors to understand that it's not like a savings account where you'll get a guaranteed interest rate return? You know, there are ups and downs when it comes to market volatility, as we've seen of late.
Yeah, I think that's been one of the challenges, is to educate people to understand that it is not a cash account. And that you can look at dividends to come through, but you really need to keep your eye on the market and see where the market's going, because that's where the gains will come from.
So let's speak to the person at home who wants to enter the market for the first time. Where's the correct place to start? I take it they need to know their limitations in understanding what risk is, what kind of exposure they want to the market, and what they will be able to afford when it comes to investing in the stock market.
Definitely. Affordability is probably the key. And I think adding on to that is to make sure that you don't put emergency money into the market. So we often find people that they've got their cash, but they actually need it when the car breaks down or there's some emergency, because the investing in the market is a long-term it's a long-term game. So you can't, after a year or even a few months, now try and withdraw that money, because the markets do go up and down, and then you lock in those losses, and then people are lost forever because they believe that's just how the market behaves. So I think number one, make sure that you do have the money, and from as little as 300 Rand a month, there's a lot of people who can afford that. I think the second point is to be realistic about your own understanding of the markets. We're not all traders. We don't all read the paper and know exactly what's going to happen next. Very few people do. So be realistic in terms of where your level of understanding sits when it comes to investing in shares.
Tell us about that, because I take it from FNB's perspective as well, you've offered products which are appropriate to the investor's level of understanding.
Yeah. So what we've done is we've sort of divided up to say there are people who want to be in the market, but they realize that they don't know how to go about choosing shares, and they're actually okay with that. They're quite happy to hand their money over and to know that it's going directly into the market. Then we've got the guys who they're new, they do want to do their own stock picking, but they're that new, looking at 400 or 500 listed shares, it's just a daunting prospect. I mean, they just can't do it. So to that end, we've got a product called Share Builder, where we limit the number of shares that you can choose from. You still go in and make your own selection, but it's a limited basket, 20 odd shares, which we make use of the first round house view in terms of their long-term view of what are good equities to buy into. So it's well researched, it's a good basket of shares to look at. And then on the other end, we've got Share Investor. Those are for the guys, they're comfortable looking at 400 or 500 shares and making a decision based on their level of knowledge. So there's definitely something for every level of knowledge out there.
Those are the ones who know the PE ratios and the dividend covers, right?
Bollinger graphs and all fancy things.
Exactly. But let's take it home as well to the cost implications that come with this. I understand that there also are methods where tax-free savings accounts have been opened in conjunction with some of the products that you have. But on a normal trading account and investing, are there significant costs that could be incurred?
So I think with any trading account, you do pay brokerage when you place a trade, whether it's buying or selling. There are costs that you incur. I think the very important point to remember is to make sure that you look at that cost relative to the amount that you're going to invest. And what I mean by that is sometimes the amounts do get so small that the costs eat into 30% of that capital. And then if you think about it, the market then needs to move 30% for you to just break even.
Sure.
So I mean, what that means is maybe on that product, for that cost, you're investing too little. So that's why something like the 300 Rand a month product is wonderful, because the cost is a 0.1%. And the rest all goes into your capital, into your investment. So very important to keep costs in mind.
And I take it if investors aren't aware or don't understand, they should actually just ask questions to the bankers that provide the service to them.
Definitely, there's a call center. They can always phone through on the website. There's so much information there. But yeah, to be sure about it, and to also read. We often find that ourselves, even, we don't always read what, on screen, what is it showing us, to read and see what's going to be the impact if I place that trade and the value is too small.
What about taxes, especially when it comes to withdrawing capital amounts or dividends withholding tax?
Yeah, so I think when it comes to shares, if you're in it for the long run, let's say 5 years and more, the taxman sees that as long term. So once you then sell and you make a profit, that'll be capital gains tax will apply to that. If you're in the short run, you are trading, you're going in and out of shares, that'll definitely be viewed as income, and you'll be taxed on income, on an income basis. And then there's on the dividends that you receive, there is dividend withholding tax, which the banks and the brokers take care of. You don't have to worry about that, but yeah, there is a tax implication for that. But when it comes to shares, different people, different portfolios, different ideas, it's always good to consult an advisor on that. But I think for the average person out there, the tax needn't be something to put you off. It can be straightforward.
Something else that we always hear about when it comes to investing is diversify, diversify, diversify. But some are not sure whether that means investing in two companies that deal in the same sector, or two separate sectors, or companies that are listed on two separate exchanges. I take it the definition of diversify can be quite broad depending on how you want to interpret it. Yeah,
I think it can be really broad, and it also depends on your own portfolio of assets, not just shares. So I think one needs to look at your own situation. I think for the average investor, you don't want to put all your money into one company. You also don't want to put all your money into one sector. You need to diversify. So Share Saver, the 300 Rand a month product, is actually a brilliant way to diversify if you've got another portfolio, because it goes into the top 100 companies on the JSE. I mean, that's a wonderful way to diversify.
So you're owning a little bit of everything quite clearly.
Pretty much, yeah.
And I take it with the other products that are available, investors take the onus upon themselves to invest in the different sectors there too?
Exactly. They need to make the informed decision into which sectors, into which industries they want to go into.
What about investing in goods? I allude to Krugerrand coins here, because sometimes as people we want to touch and feel where our money is actually going to. But is that also another alternative for investors to look at when it comes to investing on the banking platform? Yes.
So the two products, Share Builder, Share Investor, you can also invest in Kruger coins, the 4 different denominations. I think what's great about the offering is you don't have to take position. Some people do want to sit and play with the coin and show it off at the next bribe, but you don't have to. You can leave it there. It's safe there. And if you leave it there, then we guarantee to buy it back the day that you do want to sell, which I think is a great opportunity to. And also another way to diversify your portfolio is to go into gold.
On that though, I take it again, it comes back to the fact that knowing what you're doing, or either seeking advice to make sure that you don't react inappropriately.
Definitely. If you're unsure, if you don't feel comfortable with it, speak to the experts. I mean, phone your broker, phone us, and we can guide you through the process.
And being realistic about the output. Earlier on you alluded to the fact that you need to be in it for the long term, know how much you're contributing. Do we find that maybe in some cases some people think that they'll make a fortune overnight?
I do think people do think that. So if you look at the stats, I think from August 2013 to August 2014 the market grew, or all share grew by 20%. If you look at 2014 August to August just now in 2015, it contracted to almost minus 2%. So, but in the long run, we know that this contraction, it'll make up, and it will definitely go up. But you got to be in it for the long run. So people do go in and think, I'm going to make millions here, and it's not that quick. It's not as simple as that.
Exactly.
But showing patience, that'll get you there.
Patience is certainly a virtue that many investors are known not to have, but hopefully will be implemented in South Africa. But what about investing for children, or investing for the elderly, or different age groups? Because there's also that perception that maybe I need to be a little bit older, I need to gain a little bit more experience when it comes to investing. But such platforms also make it easier for maybe an individual to open up an account for their children.
Yeah, definitely. I think it's a brilliant way to start showing your kids how these things work. If you think the guru Warren Buffett started investing in shares when he was 11.
Exactly. Exactly.
thinks it was too late. I mean, that just goes to show that the sooner you get in there, the more you'll have of the growth that will come. So platforms like FNB, I mean, it's so user-friendly, it's so easy. It's a wonderful way to get your children to, well, either to start investing for their education and their portfolios, but also to show them how it works. And students, we often find that students open accounts. One would think that they don't have money, but if you've got 300 Rand a month, you can start investing on the JSE.
How's that pickup rate though been with younger individuals? Are they showing a keen interest in maybe picking some stocks themselves?
They do. I think as they come out of varsity, you know how clever we are when we leave the university.
True.
We do see them opening accounts and trying it out. So not millions coming from them, but they're starting to gain the confidence. And over time, you know, the salaries will grow and they will be able to make sizable investments in the market. But the sooner you start, the bigger chunk you'll have of the growth that's definitely going to come.
Exactly. It's time in the market, not timing the market, right?
Exactly.
Indeed. Well, we've certainly said quite a bit, but let's try and learn how we can apply what we've learned into real life scenarios. Well, what should we be remembering about tonight's conversation, Carin? I'm sure you can enlighten us as to, for those who want to invest and have been holding off for a long time, clearly the time for them to start is now.
Oh, definitely. So I think be realistic about how much you know. Don't try a hand at something if you really know that you don't know. Don't use emergency cash. You know, the markets, it's unforgiving. It takes time, so don't use emergency cash. I think the one point that we didn't really touch on is volatility.
Yes.
And to that extent, I want to say don't panic. When the market goes down, the first thing you need to do is not panic. See it as an opportunity to actually get in when shares are cheaper. And then consider costs. Just always consider the impact that costs have on the capital amount that you're going to invest in the market.
And on that, the volatility and how you respond to the market and buying in the dips, which are also terms that we so often hear, does this offer investors and those with accounts the flexibility to maybe increase their debit order, decrease it when things are getting a little bit tighter?
Yes, definitely. It's completely flexible. So it's really up to the individual to make use of those opportunities when the market is down and it is coming at a discount.
Exactly. Carin, thank you so much for your time this evening, teaching us all we need to know about investing for beginners. That's where we leave it for Personal Finance tonight. A big thank you once more to Carin Meyer, CEO of FNB Share Investing. Remember that we want to hear from you and tell us what your first share that you bought was maybe, and give us your views on investing in such volatile market times. You can tweet any of your comments to @CNBC Africa using the hashtag Finance410 or to myself @Gugulethu on Twitter. Until next time, take care everyone.